everyone, thank you for tuning into my channel. So let's pick up where we left off yesterday on step 1 of home buying process. So now that we have ordered a credit report, now we could check to see all the reportings that are shown on your report. Now, even though there's negative information that you know it's accurate and it does belong to your credit that you have applied, then please don't be discouraged that, oh, okay, because I have a negative report on it, then this is going to limit my ability to getting a good loan. Before we jump into anything further, what we could do is write a letter, an explanation called LOE, which is called the letter of explanation, to the lender, stating good reasons as to why you had that negative reporting and what you are doing, to work getting it worked out, or what the circumstances. And I think that's a great way to just disclose to your lender what the situation is. Okay, now I'm just going to simply talk about the different type of loans are out there. And in California, the common loans programs are conventional loans and FHA loans. Conventional loans are pretty standard, right? You see, that's the majority of the loans that the lender offers, which is a down payment of 20%, down payment of 10 to 15 to 20%. And also, conventional loan has lower down payment of 20%, or it could go down to 10 to 15% depending on the lender. And that is a great benefit because that lowers your mortgage payment, the more down payment you make. But anything under that falls into another loan type called FHA, which is the Federal Housing Agency, insured by the government. So government backs up their loan. So that's why there is a premium mortgage insurance payment. People commonly they just say, oh, mortgage insurance, but it's called premium mortgage insurance. And it's based on the loan amount. It could be a few $100s added to your additional mortgage payment. And that will go towards the insurance in case you default on the loan. Hopefully that won't be the case, but just because of the low down payment, lender needs some kind of security. And they got the insurance backed up by the government. And here is one of the main key important factor in getting a loan, which is the debt to income ratio. I can't really stress this enough. And a lot, including myself, a lot of us, we think that, oh, our credit scores are good, we have a high income. But when it comes to debt and your debt is over some percentage of what the lender is looking at, then we have to think about the debt to income ratio being high. So the lenders they have a formula because they don't want to qualify for a loan with somebody that has a high amount of debt. And I think that makes sense. So let's kind of dive into what a debt to income ratio is. Your debt to income ratio is all your monthly payments. This includes your loan payment, your auto loans, credit card debts, anything that's occurring on a monthly payment expenses. We could leave the rent out, divided by your total income. So your income before taxes. So all your total monthly expenses, your debts, divided by your total income. And let's see what the percentage of that is. And if it's over, let's say the standard percentage is 45, or it really varies, that's when we need to consult with the lender. If it goes over a certain percentage, like 43, let's say, then you have a higher debt to income ratio. But if you fall under, then you're in good hands of getting the interest rate that what the market offers. So this is a time to let's check on the debts and see if there's anything that we could do a snowball effect, maybe paying down your credit card smallest to highest, little by little, if you have some time before purchasing a home. So another step, and the main step, is to get your loan pre-qualified and pre-approved and final approval. So those 3 steps are the main events that happen when you're buying your home, when you're getting a loan. And so let's not confuse those two words, because the pre-qualification is basically what the lender will give you, like a pre-qualified letter. It's called a pre-qualification letter based on what you told them verbally. And the next step would be pre-approval letter is when the lender have gathered and collected all your information, your documentation that they have requested for them to submit to their underwriter, because the lender has an underwriter on the back end to examine all your financial documents in order for them to determine to approve you on the loan with them. So that would be a pre-approval letter, would be the document that you will need to have in order for you to really shop for your home. You could shop based on the pre-qualification letter, but please, I would strongly suggest that you provide every information. The best thing to do is really shop around. Like when you shop for a car, like it's really kind of fun to shop around with more than 2. I think 3 is max that you could shop for with different companies. So that way it gives you a better leverage of what to expect, because once you talk to one car specialist and another person, you get pretty different information too, and you get more of a feel of who you feel like you're comfortable and that you could be working with, and who you feel like you could trust. And okay, so here are some of the main documents that the lender is going to ask. So if you are, and I'm telling you these things so that you could have these documents ready within a month that you're trying to prepare to buy a home. So if you do this at the last minute, the lender has their time schedule, and especially during a transaction, it would be whenever a lender requests something to the consumer, it is best to provide to the lender as soon as possible to avoid any potential delays. So the main initial documentations that I've gathered here, that your most recent 2 years tax returns, that is the must. A full credit report, and I think for now we could send in that free credit report that you have ordered. 2 to 3 months bank statements. Some lenders will even ask for more, but I think 2 to 3 months of bank statement is good for now. But if they don't see much activity in the bank statements, then they're going to ask you for additional bank statements in the past. Now, if you're self-employed, they will look up your financials more closely, and so other documents will be required. So now that we have those documents in place to prepare and submit to your lender, I think this is a time where we could kind of go over what our budget is. We need to factor in any home ownership expenses that will arise when you decide to move into the home, when you become a homeowner, and possibly, so that's like emergency expenses for home ownership expenses. And from the beginning, like the initial part of that emergency fund, do we have living expenses anywhere from 3 to 6 months in the emergency funds? God forbid, hopefully nothing happens, and trusting that, us educated buyers will not fall into any mistakes. But if it does, something tragic happens, unexpected things could happen anytime in our lifetime. So it would be, I think, best to have that emergency of living expenses just in case for rainy days. This wraps up my video today. The next video, I'm going to be covering about the closing cost in a transaction. So how much it will all cost in the end prior to closing your home. I hope you got something out of this today, and if there's any questions you may have, I'm here for you. Said that there's no question is a dumb question. It's only dumb when you don't ask. So, which I thought that was very true. And so, yeah, feel free to fire away with any questions you may have. We all have questions. That we're all in a learning process here. We're all learning. We're all growing here in this pandemic. So we're all in this together. Again, please stay safe, even though we're in a hot weather. And I'll see you in my next video. Bye.